a trading plan. So it is crucially important for all traders to start out with a plan. And unfortunately, most don't. What happens is you get caught up in the moment. You register for a platform, you finish your regulatory approval. Sometimes you'll start out with a demo platform, but in no time flat you get pulled in. Before you know, you've made real cash deposits and you're just trading. You haven't mastered a strategy. You haven't built a trading plan. And unfortunately, in this industry, too many people lose their money, want to get mad at everybody, but the fact is they didn't do anything really to start out from. So while you're in a demo mode somewhere, you should be building your trading plan. So in order to become a successful trader, you need to develop a written trading plan. Now, yes, it doesn't have to be in writing on a piece of paper, although if you ever came to look at my office, you'll see old-fashioned index cards, because when I started, we didn't have computers, PCs. So everything I did was written down on paper. My plans are written, my strategies are written, and I've been using these for 40 years. But today's younger people, and I use a computer fairly well, don't misunderstand me, but today's younger people do everything on either their mobile device or their computer or their tablet, and they're just putting everything that's very easy to sort, very easy to find, because every trade you make should be logged in somewhere. Every result should be analyzed, everything that happened in that trade, so that today, again, thanks to computers, anytime you see a repeated thing in the market, or you said, okay, I did really well on that Euro USD, a couple months ago. I don't remember exactly when I traded, but I see that same pattern or the same movement happening in the market. You could access that. Okay, and say, look, this is what I did last time. This is how I calculated everything. This is what my indicators were at. And I see that same thing happening again. So I'm going to make that same trade. But if you're not, and if you don't have a trading plan, you have no records. Now, your trading plan is not a strategy, and a strategy is incorporated into your trading plan. But this is your trading Bible, and some of us can go overboard. What time of day you're going to start trading, only in what environment, how you can do it. Now, the more things you build into it, and the more you formulate your life, it's like building a business plan for your business. You open up a store, you're not going to open up the store and have people running in your front door, buying everything up and you making tons of money. But even if that happens, even the day you open, there's a line of people down the block and they buy up all your inventory. If you didn't have a plan, if you didn't decide when you're going to reorder, how much capital you need to reorder, how much inventory you have to have, when you should place those reorders, how you're going to pay for that reorder when it arrives, and then if you're not doing any analysis, like maybe you found out the light blue shirt sells better than the dark blue shirt, but you know what? The smalls sell much better than the mediums, but the extra larges do really well. You end up buying the wrong mix of product. You end up, well, it's no different in the Forex market. It's no different in the CFD market. Now, there is no such thing as an ultimate trading plan because there are no two exact traders. And every trader has a different style, a different strategy, a different risk tolerance, different market experiences. It's always better to develop one's own personalized trading plan and modify it as your experience grows, because this is like your diary. Okay, everybody's different. I can't tell you only to trade 3 hours a day between the periods of 12 and 2 and you'll be successful. Because maybe you're like me. I have my morning energy. I get up at 5 o'clock every morning. I do a lot better early in the morning. When somebody says, well, can we have a meeting at 5 o'clock? I usually say no. Because by 5 o'clock, I'm exhausted. Okay. I'm a guy that says, okay, I'll meet you at 7 o'clock in the morning for a meeting. People think you're crazy. I don't start working until 9 or 10. Okay. Everybody's different. Okay. A trading plan should be thought of as a template for trading the markets. Perhaps even a better way to describe a trading plan is that's a checklist. This checklist will contain each aspect of making a trade in a logical step-by-step sequence that acts as your objective guide in trading the markets. In essence, a trading plan will state your overall short and long-term goals as a trader, and provide you with a clear checklist of how to achieve them. You'll ask, what are your trading strategies that you're going to trade? What currency pairs or what assets are you going to trade? What will your daily routine be? Because the thing is, nobody thinks about, should I have a daily routine? And the fact is, the markets are much different on Monday afternoon than they are Thursday morning. The markets are different between the Asian crossover to the European crossover to the American crossover, and they're different when it's coming off of a holiday going into a holiday. And if you're not aware of this and you're not building your trading routine, so you decide, I'm going to trade whatever day I have a few minutes, whatever time of day you're all over the place. Think about how many trades you're willing to have. How many trades before you'll sit down and do a full analysis? Too many people just looking at their portfolio. Look at that. I started out with $10,000 and now I have $11,000. So I don't care. I'll keep doing it. But did you ever sit down and analyze how you're doing, which trades were successful, which ones weren't, and what strategies were on? Did you ever go back and realize you think you're doing really good in gold, and you go back and analyze it, you really didn't do good because you had 2 big losers in gold, 4 profitable trades in gold. You only remember the last 2 profitable trades. And you realize you actually just about broke even trading gold. And when you look at it, the 2 trades you made early in the month on the euro US dollar were more successful. If you would have just kept those 2 trades and didn't trade the balance of the month, you would have more money than you had now. So maybe if you analyzed your trades, you would notice things that you're doing incorrectly or that are costly to you. Me, I stop every 10 trades. Very end. I also stop for the day when I've had one really good trade. If I get a really good trade and the markets rally, guess what? I take my profit from that trade, I close out all the other trades I have going on my platform, and I take the rest of the day off because I've made my profit for the day. Okay? When I've had a really bad day, a really bad trade, not a bad day, but a bad trade, guess what? I close my positions and close down my computer, and I just walk away. Because you don't want to start pushing those other trades to recover what you lost. You need to get past it. You need to get your emotions away. But if you have all this written down and you follow your guide, your diary, whatever you want to call it, it'll say, okay, Barry, it's time to get up from your desk and walk away. You can include in your trading plan, I'm not going to ever trade between the 13th and the 18th. I'm going to take those 5 days. I can do some analysis. I'll do my other things. Or those 5 days, I'm not going to trade. I need to get fresh eyes. Okay. Now, one of the toughest things to incorporate in your trading plan, because one of the toughest things that traders have to deal with is factor in a money management and risk management rules. Because I see very few traders in all my years of trading and all my years of teaching and all my years of individual advising, I see very few traders that actually have risk and money management rules written down. They may calculate something when they're looking at where to put their stop loss and can I afford this trade, but they don't have any guide. It's like all gut feelings. So the next thing it should state is what instruments you are trading. Okay. Because again, a lot of us get distracted real easy. You get an email in the mail about Facebook rallying 4.5% yesterday after Zuckerberg's testimony, or the fact that Amazon's down 15% because of Trump's attacks on it. Well, we know Amazon's going to eventually recover. So you jump off and buy Facebook or Amazon, but you're not a stock trader. You're a currency trader. Guess what? You cannot master 20 different markets and 100 different instruments. So pick out what instruments you're going to trade. Now, yes, if you think, well, Amazon's depressed because of Trump, but Amazon we know is going to bounce back. Maybe it's not to be traded. Maybe you want to call your stockbroker and buy a couple hundred shares of Amazon and put it away as a longer term investment. That's perfectly fine. But your trading plan for trading should break down what assets, because we can too easily get distracted And you need to have a routine to your trading activities. In your pre-market phase, you will write all you are going to do from waking up. Okay, and this sounds ridiculous. Now, this is if you're a full-time trader. But in your things, maybe you only trade Monday, Wednesday, Friday. Maybe the kids are off at soccer and basketball on Thursday evening, and the wife takes them, so you have 4 hours free. This is your day you're going to trade. Not okay. The kids went to a birthday party, and I have 2 free hours. I'm going to go jump on and make trades, and it's Thursday, Tuesday night. Doesn't work that way. If the kids are gone and the wife's out for a while, and you have a couple of free hours, go do some analysis. Go build some strategy. Go learn and read about the markets. Don't get addicted to just being on that platform pushing buttons. And make sure you maintain a trading journal which logs all of your trades. Now, this is important because it allows you to analyze your trades and the success of your plan. Now, again, because of computers today, things are pretty easy. Most trading platforms in your account will allow you to export directly to Excel or in a common delineated folder all of your trading activity. So there you can just upload it into some form that you have into an Excel spreadsheet or whatever else and keep it all logged in by asset, by time, by trade, by success rate. And how much work did you have to do? And then you can do your analysis pretty easy from that. But your daily routines are crucial for your trading success because based on them, we build a ritual that helps us maintain a high level of focus and a state where we perform at our best levels. Now, this is very important. Now, most of you have been coming to my classes over the years. And as you know, I've been teaching for many years. I was a trader, a commodities trader 40 years ago when the markets were slower and we did everything by hand. But I had a big problem. I too often let my emotions get involved. And in 1980, 81, 82, I was making so much money that I didn't know what to do with it. Seriously, I had several houses, cars up the yin yang, money coming everywhere. 83, I was broke, lost everything because I was chasing the markets. And as soon as I had a string of losers, I needed to recover my losses, and I kept increasing my positions. I kept trying to trade harder. I kept judging my strategies, kept changing, trading longer hours, lost everything. From that day on, I got out of that entire part of the markets and went and did something else because I said, my personality doesn't allow me to do this because I can't be stone-faced and take the emotions out of it. Yeah, I can trade my own small little account, but I can't trade professionally. Now, I'm a lot older, it's 40 years ago. I can control my emotions somewhat, but I still use my gut feeling and my emotions too much. But I find by having all of this written down, and I have very firm rules about how much I'll risk. I mean, I have trades that I had enough money, I could have been very rich on it, but I don't trade that kind of volume. I don't use that kind of leverage. Okay. I don't risk that much money. Now, there's a word that we came up with, stick-to-itness. It's not really a word, but it sounds good. Stick-to-itness. Is this a word? No, I kind of made it up. It's the creation of a trading plan is highly useful as it reduces the possibility of bad or irrational decisions. If you have a written trading plan, then you have a trading filter that filters only high probability trading opportunities. It's important to have a written plan because in order to keep a high level of discipline, you need to read it every day. The key to discipline and objective Forex trading is to establish a trading plan where you put all the necessary rules and you stick to it. Stick-to-itness. Now, we're going to talk about a couple different trading plans and what you can add in. And we're going to look at some of the most important elements. And then when you do your analysis. But I'm going to share with you a quick little video that a friend of mine did. And that's going to give you some general guidelines and show you exactly what you should be doing with your plan. And then we're going to go on to looking at the 10 most important elements. So let me pop up this video, and then we'll get back to There we go, ladies and gentlemen. I hope you liked my friend's video. And she gave you a very concise beginning point. And that's all it is a beginning point. This is 5 steps that you can add in to start your trading plan somewhere. Because everybody says to me, well, there's so much out there. Can you give me a ledger? Can you give me a template? And the fact is there really aren't many templates. So if you start with those 5 points and then start working out from there and keep defining your plan. Because some of the best tips, and I'm going to give you some of the tips that are more important built into there are your other things that you want to not deal with. And that's the problem is too many traders want to deal with, it's easy for them to set up a trading plan for how to make a trade. Not how to analyze the trade, not how to what strategies, but the points that we just looked at. But then in my 10-step guide, one of the most important rules, or number 1, is how many trades will you use to evaluate your performance? Now, like for me, depending on how much you trade, there's got to be a number of trades before you stop. Well, on an average week, I make no more than 10 trades. But I stop after every 10 trades and do a full performance analysis. Because, markets shift. Okay. When markets shift, sometimes your strategies don't work as well as they were working 2 months ago or a month ago. Or a flat market is, you need to start looking and say, you know what, it's moved over a flat market. A couple months ago, if you were a stock trader and you were trading indices, the Dow and the S&P were sailing up so hard, you couldn't be wrong. But then when the markets got flat, you would have started to look at other strategies or what strategies you need to adjust or what indicators aren't working well for you and get them out. Because if you wait too long, you've ended up having too many losses and you wipe out all your profit by not looking at this. But remember, time is irrelevant in the world of trading. Trading is one of the few areas in this realm where the space-time continuums have no realm. So the answer to the question is base your evaluation period on the number of trades placed, not the amount of time that has passed. Now, like I said, for me, that number is 10. This applies to both my swing trading and my day trading activities. On the average, it will take me approximately 3 months to place 10 swing trades, because as you know, swing trades last a lot longer, and about 4 days to place 10 regular trades. So I only mentioned the time element so you can see how long it takes me to place that number of trades based on my trading style. But every 10 trades, no matter how many they do, some days there's lots of trading and other days there's nothing at all. But after the 10th trade, I stop and do not go back to trading until I've done a full evaluation. So what is the number of trades you will use when evaluating your trading activity? It's up to you. Now also, you want to identify your key performance matrix. How are you going to analyze your success and failure? Because success and failure isn't about how much money you have in your portfolio. Because the fact is, you could have made 10 terrible trades and 1 really big successful trade, and so you have a positive portfolio. But what matrix, how are you going to analyze how you are doing? Okay, it's up to you to decide this, because it's up to you to decide what you want to do. Now, there's also another rule, and that's called my maximum drawdown. Because some days, there's a lot of positions that are available. Other days, there's not. Okay. Sometimes you have, if I have 3 4x trades going and 3 long-term swing trades going, okay, I'm going to look down because I will not at any time have it risk more than 20% of my portfolio. And if I have that maximum use of my portfolio, I can't make another trade. It doesn't matter how beautiful it is, no matter how good it looks. This is my hardcore rule. Very end, because you know what? There's always trades. There's always another trade. Then it's important. Okay, too many traders stay on that computer trading all day long when they have time, or for hours and hours on end. Nope. You need to decide exactly how many, not how many trades, but the hours you're going to trade, because the markets are different during different hours, different strategies work. And you need to say, okay, I'm only going to trade, say, from 9:50 in the morning to 12 noon. That's up to you. It depends on, I'm only going to trade Tuesday and Thursday evening from 7 until 10 o'clock. That's it. Okay. The rest of the time, I'm a spectator on the sidelines. I'm doing my charting. I'm doing my market analysis. I'm doing my trade analysis. You have lots of things to fill your time. But too many traders want to fill their time with trading. Okay. You also want to decide how you're going to determine your edge. Are you looking for breakouts, chart patterns, high volume, tight spreads? Do you want to have consolidation before a breakout? You decide. This is your personal decisions on what is going to institute a trade, what's going to make you trade, what trades you should be taking. Nobody can tell you what they are, but you can set your guidelines so you don't deviate from them. You don't go to the pub tonight, talk to your friend, and he tells you, I learned this great strategy, and when this does this, and this does that, and that does that, you do this, and you go home, and you see this, and this happening, just like he told you, and you enter a trade, and you lose your money. Because that wasn't your edge. That, again, we all have emphasized it over and over. Besides developing a standard methodology, also identify the assets you will trade. Okay. The goals are very important. What are your short-term and long-term trading goals? Okay. And stick to them. Reach the goals. Remember, a goal without a plan is just a wish. Then you can have to incorporate your full trading strategy. I'm not telling you what it is. You may like MACD. You may like just moving average crossover. You may like RSI. You may be a fundamental trader. You may only trade from the economics count. You may only trade stocks. You decide what you want, how you want to do your analysis. Maybe you only want to trade growth stocks or high value stocks or sectors. You might want to trade indices. You decide. And then you decide how you're going to evaluate the market and what trading strategy you're going to use, what's going to give you those entry and exit points. This is completely up to you. Me, you, and the guy down the street are not going to have the same strategy. And if you try to master his strategy, then you're a fool. Because the only strategy you should be using is the one you fully develop and you fully understand. Okay. Now, one of the best ones, I have a firm rule myself, because I don't consider trend lines, volume, and support and resistance strategy. These are my core values, and I always have these on all of my charts, and they always tell me what's happening in the marketplace. I'm always, before I ever make a trade, one of my big things is before I enter a trade, guess what the rule is? Before I push that trade button or that order entry button, I go quickly back to the economics calendar to make sure that there isn't an event on the schedule that can mess up my trade. Because too often you're 100% right based on the markets. But you know what? You didn't realize that Mario Draghi is going to come out and talk on the euro, come out of a central bank or inflation report, and there's a speech or there's an economic number that comes out that sends the markets in turmoil or pushes the asset in another direction, and you didn't realize it. Okay. Because even though you're right and the trade ended up where you were, maybe it sparked a few minutes of volatility and you didn't put your stop loss far enough away because you didn't incorporate that volatility from the economic event. And so my firm rule is always look at that economics counter. My other firm rules, I always go to Bloomberg and look at the quick headlines of the most recent things to make sure something crazy has. Did Donald Trump do something crazy? Did we go to war somewhere? Is something going on with oil? Did we, because all of that can throw the euro in one direction. It could extend the dollar. We can send us all into safe haven mode. Okay. And so all of your analysis could be worthless at that point. Okay. And remember, like my friend said in the other video, place your stop losses. Decide when you're going to exit a trade. Okay. And for some reason, traders have fooled themselves into thinking that successful trading only boils down to the latest algorithm or technical indicator. This couldn't be the furthest thing from the truth. When you are trading, you will forget that there are human beings at the other end of the buy and sell transaction. This is a head-to-head competition to see who is right and the bulls or the bears. And this is what most people don't understand. An asset can only virtually go in two directions, up or down. Now you're trying to move the odds of making the right decision in your favor. But sometimes, just statistically, you're going to be right. But you can lose that by not having the right frame of mind, not putting your right stop loss, not putting your right exit points. I've seen too many traders, forget to use sliding stop losses or to move their stop, and their trade moves into full success. They're sitting there calling me on the phone saying, guess what? I just made 40 points. I was right about that. And while they're telling me on the phone, bragging about it, that asset bopped back down 40 points. And guess what? They got stopped out at zero, or they got stopped at now. Instead of talking to me, he would have raised the stop loss up, sold part of his investment, and raised the stop loss a little higher. Guess what? He would have had a winning trade. But because he was too busy talking on the phone to me and not doing the things he should have done based on his trading plan, lost money. So the success factor, my friend, begins and ends with a winning attitude. Think about it. When you see your stock have a short hiccup in the current trend, is your first reaction to sell to lock in your profits? Or do you move your stop up so quickly that you are basically begging the market maker to trigger your order? Okay. Now, another important thing is how much money can I use per trade? Because with leverage out there, too many people think that just the margin is all they're talking about. Your margin is a deposit. But how much is the bill going to be? Okay. Now, an important thing, and I've harped on this throughout, is when to take breaks. No, we're not talking about a holiday. We're not talking about it's just Easter, and we had Easter Sunday and Easter Monday off. Okay, we're not talking about the days the markets are closed. Have a rule. I take a break after I place 100 trades. Okay, I just take a day off. That means the computers are off. I'm not looking at the markets. I'm waiting. Not a holiday day. What I'm doing is I'm trying to teach myself discipline. I'm trying to keep myself from being addicted to that screen and that platform. I'm saying I'm in control. I'm taking the day away from the trading, and I'm perfectly fine. So this is a self-imposed break that goes back to exercising discipline and your control over the markets. And remember, keep calm, take a break. Okay. Always look at limit up and limit downs. If I lose 2% of my trading capital at any point during the day, I need to exit all my position to go fishing. Conversely, if I make 7.5% of my trading portfolio in one day, guess what? Do the same thing. Gone and gone fishing. Don't get greedy and don't get hungry. Okay. Now, like I said, there is no sample. This was a sample that I used to give out, but it's such a poor thing to start with. You can start on your own and write something on paper. Start out with the 5 steps that you saw in my friend's video, and then start adding on to it. You'd be surprised, in no time flat, you'll be writing something. Start it on a Word document. Rule number 1, rule number 2, or how I'm going to start my day, how I'm going to end my day. Don't necessarily fill it in. Fill in the middle first. Fill in the easy stuff. What my buy rules do, what will my sell rules do, where's my exit point, where's my entry point, when will I evaluate? These are things you can write easily, and then keep filling it out on either side. So on that note, I'm going to say goodnight to everybody. Thank you very much for joining us, and once again, go to www.tradetime.com, and guess what? They'll help you set up your trading plan. In fact, they allow you to customize a good deal of your entire account based on your trading plan. So thank you very much. Have a wonderful night, and thank you for joining us. Good night now.